Welcome back to the Junius Multi channel for today's part 2, second installment, as we take a closer look at the changing landscape of the global gold market, especially with the recent news, the Shanghai Gold Exchange, the SGE as they call it. We're going to take a really close look in this video at what's called the Shanghai Gold Benchmark Price White Paper, put out April 2016. It looks as if this document comes from the Shanghai Gold Exchange, and it was emailed to me by one of the viewers out there. I'll leave him anonymous just in case he wants to be protected from this data dump, we'll call it, this WikiLeaks. I don't know. I'm sure this is open source material. It looks like it is, especially the time I got it. I mean, immediately after the Shanghai Gold Exchange hit the news and went active and went live, this document showed up from one of our devout subscribers here and viewers. And just again, that reminds us that this channel has become such a good community and an exchange of information. This stuff just gets around literally at the speed of thought around the world. So let's get right into it. I'm not going to chew this whole thing apart and analyze every single facet and slide. It's pretty complicated. It's about the daily price setting and fixing of gold. But what I really want to cover when we look at this is the reason that they set it up. They're going to cover that at the beginning, and then some of the opinions that we're going to find at the very end. So you're really going to want to stick around for that. There's some opinions from the Official Monetary and Financial Institutions Forum that I think you guys will find interesting. Please don't skip to the end just to hear those. Let's go right through this. A lot of good material to cover. So let's get right on it. Shanghai Gold Exchange, here we come. White paper. We're going to open it up. Take a look here. About the Shanghai Gold Benchmark Price. Definition. What is Shanghai Gold? The term Shanghai Gold refers to price product launched by the Shanghai Gold Exchange, SGE. The underlying is gold ingots with a standard weight of 1 kilogram and a fineness of no lower than 999.9, delivered in Shanghai and traded via SGE price trading platform. What is Shanghai Gold Benchmark Price? The term Shanghai Gold Benchmark Price refers to the Renminbi denominated benchmark price. It follows the principle of tendering volume based on price, with all orders executed on the SGE price trading platform during the auction period of Shanghai Gold trading, which is done through SGE price trading system. When the price and volume reach the balance, the final benchmark price is determined. Now, the purpose of launching the Shanghai Gold Benchmark Price. What's the purpose that they did this? To provide a tradable and reliable RMB denominated gold benchmark price for the gold market. They even underlined it and made it in bold, in case you didn't understand the importance of that statement. China is the largest producer and consumer of gold in the world. SGE, the exchange where major gold producers, consumers, financial institutions, and investment companies gather, has ranked as the world's largest physical gold exchange for 9 consecutive years. Therefore, Shanghai Gold Benchmark Price, launched by SGE, will be useful as it adequately reflects the gold supply and demand in China and represents the price trend of China's gold market. It will provide a tradable and reliable RMB denominated gold price for the gold market. To improve the development of China's financial market. At present, China's gold derivatives market is lacking in an authoritative and equitable gold benchmark price, which is denominated in RMB. Again, to remind you, that's the Renminbi, the Chinese currency, aka the Yuan. The launch of Shanghai Gold Benchmark Price will facilitate the development of China's gold derivatives market, which will also have a big impact on the price of gold-related financial products, wealth management products, and derivatives. Comparison between Shanghai Gold and local London Gold. Shanghai Gold is quoted in RMB per gram with the underlying of 1 kilogram standard gold ingot with a fineness of no lower than 999.9 physically settled in SGE, certified vaults. The local London gold is quoted in US dollars per troy ounce, with the underlying of 400-ounce gold ingots with a minimum fineness of 995 and physically settled in London. Due to the difference between quotation units, underlying assets, delivery points, and time zones, the relationship between Shanghai gold and local London gold is non-competitive, while the two complement and facilitate each other and share mutual benefits. Big thing there, big takeaway is look at the US dollar. Okay, now the London gold fix is quoted in US dollars per troy ounce. This is going to be in Renminbi. That's why they're calling it the Yuan, the gold-backed Yuan Renminbi. So we're going to see another currency now, other than the dollar, competing for gold. And I know they put a lot of words in there about how this is not competitive and they're going to complement each other, but that could be political and diplomatic to word things this way. Again, my position on this is I think it's a good thing. I encourage it. This is going to really open up, I believe, the transparency in the gold markets. Continuing on, Shanghai gold and local London gold will reflect the different supply and demand situation of the two markets in two locations respectively, which provide investors that have different needs for reference and usage. At the same time, the non-exclusive and non-fungible relationship between Shanghai gold and local London gold can make the two complement each other and promote mutual development in the global gold market. I think it's going to create a global gold bull market. We're going to see some slides here. We're going to go through these fairly quickly. If you want to pause at any point to kind of take them in, go ahead and do that. And I'm going to put the link for all of this material, this main article, this paper, in the video description, so you guys can go open it up and peruse it on your own time at your leisure. But continuing, comparisons between Shanghai gold and local London gold are as follows. Just tells you the quick difference there. The trading market, Intercontinental Exchange, ICE under local London gold. On the other side, you see the Shanghai gold, SGE. Trading codes, there it is, the LBMA gold price, and then for the Shanghai, it's the SHAU, quotation unit. Now the London gold is US dollars per troy ounce. Shanghai gold, RMB, Renminbi per gram. Again, I'm going to go through these slides very quickly, let these ones just kind of scroll through as we talk about this, because I want to get you guys towards the end here. One thing I want to show you is the basis here. When you look at the minimum price fluctuations, you'll look at it's to the penny per troy ounce on the London side, and to the 100th place, again similar to what the penny would be for the renminbi per gram on the SHAU side. Daily price limit, there is no limit. You'll see trading times here for both the London and the SHAU, the Shanghai Gold Exchange. You're going to see different times for when there's a morning auction, and then there's the PM or the afternoon or evening auction. You'll see London time, but then you'll also see Beijing time for the SGE. But let's keep going here. We're going to get to some more information here. A lot of these slides that we're going to roll through are going to be just the rules and the way the auctions are going to take place, how the communications will unfold, how the deals will be struck, basically, on setting the price fix for gold in these respective markets. As we go through, we're going to read this part here on number 4, part 4 here. Don't remember what page this is, but it's comparison between the SHAU and the AU999. SGE price matching products are traded under the principles of price priority and time priority, which one member or client place an order with the price and volume to buy or sell, another member or client sell or buy at the same price or the best price. Shanghai Gold benchmark price trading aims to discover the price of a certain point of time when the net volume between buy and sell is relatively balanced. All orders are executed at that price. It is the balance between supply and demand of the whole market that determines the transactions. The comparison between the SHAU and AU9999 are as follows. More details can be seen in Annex 1. We'll see those at the end. Again, here's the SHAU, the AU99. Continuing onward, lots of slides here just showing us the settlements, how the trading hours are going to go and unfold. 5 characteristics trading under the principles of fairness, justice, transparency, and integrity. SGE provides a centralized marketplace of gold trading. clearing, and physical delivery. Shanghai Gold benchmark price trading is regulated by the People's Bank of China. SGE follows the rules of the Shanghai Gold Exchange on the Shanghai Gold benchmark price trading, which ensure the normative of trading and protect legitimate rights of trading participants. The initial price of Shanghai Gold benchmark price is set by a third party, which makes it much fairer and easier to be accepted by global regulatory authorities, legal and compliance department of banks and investment institutions. Participants, all qualified SGE members and clients, can apply to participate in the Shanghai Gold benchmark price trading. The Shanghai Gold benchmark price trading is based on fixing member and reference price member. Fixing member refers to the institution that shall submit the market reference price during centralized auction period and make supplementary offering against the imbalance. Currently, 12 domestic and foreign commercial banks are fixing members. Reference price member shall submit market reference prices during the first round of centralized reference price offering period. Currently, 1 commercial bank and 5 domestic and foreign gold producers and consumers are reference price members. SGE examines and accredits qualification of the fixing members and the reference price members. Now, an eligible applicant for fixing member should be a financial institution, be with registered capital or net assets of RMB 100 million or equivalent, have a good business reputation and operating history with no record of violation of the law in the latest 2 years. Okay, so that excludes HSBC and Deutsche Bank. Possess a sound organizational system of financial management, internal control, and risk management. So that excludes pretty much every U.S. bank. Be an active trader with SGE or in the international gold market. Abide by the rules of the exchange. Satisfy other conditions prescribed by the exchange. So you can see there's some pretty strict rules there if you want to take part in this process. An eligible applicant for reference price member should be a leading producer or consumer in the gold industry, be with a registered capital or net assets of RMB 50 million or equivalent, have a good business reputation and operating history with no record of violation of the law in the last 2 years, have been an active trader with SGE or in the international gold market, be involved in the production, processing, trading, and investment of physical gold, abide by the rules of the exchange, satisfy other conditions prescribed by the exchange. After approval by SGE, fixing member and reference price members shall meet the obligations required by SGE and have rights granted by SGE. Pricing, process, and operating flow. The key point for Shanghai Gold benchmark price trading mechanism is to find a point of time when the supply and demand reach a balance. Do you see how basic this is, ladies and gentlemen? It really is. This is like not even economics 101. This is economics 1. Supply and demand. Basically, you got guys sitting down. What's the supply? What's the demand? Where do they intersect? That's the price. Done. The price at this point of time is regarded as the benchmark price. Each session of Shanghai Gold benchmark price consists of 3 main steps as following. 1. The Shanghai Gold benchmark price trading system calculates and publishes the initial price based on the reference price provided by fixing members and reference price members. The calculation and formation of initial price. Before the start of AM session or PM session, each fixing member and reference price member will provide a market reference price. The initial price is determined by the following rule in 3 scenarios. All fixing members and reference price members will first offer reference prices within the designated time period. If 50% or more of them have offered the prices, the exchange will discard the highest and lowest and use the arithmetic mean of the remaining reference prices as the initial price for the first round of the current centralized pricing trading session. If less than 50% of fixing members and reference price members have offered reference prices, the exchange will consider the reference prices invalid for the current session and will instead compute the arithmetic mean of all the executed prices for the AU 9999 spot gold product traded on the exchange within the time frame for the submission of reference prices and set the average price as the initial price. And lastly, in the event that within the time frame for the submission of reference prices. The AU999 has no valid execution price. The Shanghai Gold reference price from the previous trading session shall be set as the initial price for the current session. The Shanghai Gold benchmark price, introducing both fixing members and reference price members to provide quotations during the first round of centralized pricing auction, makes the trading much fairer and will reduce the risk of manipulation. Little key takeaways here when you read through this: reduce the risk of manipulation. That assumes there has been manipulation in the past, and if so, who's done it? They've recognized the possibility of manipulation in the gold market. Remember what I mentioned in the last video? I believe that Russia and China recognize that and are making moves to see to it that these manipulations can no longer occur. All SGE members and clients submit their buying quantity and selling quantity based on the initial price of the offered price. If the net volume in the market is imbalanced and the total buying volume is larger than selling, SGE will adjust the price upward following the trading rules round by round until the buying volume is reduced, while selling volume is increased so that the market reaches equilibrium. If the net volume is imbalanced and the selling volume is larger than buying volume, SGE will adjust the price downward, following the trading rules round by round until the selling volume is reduced, while buying volume is increased so that the market reaches equilibrium. Once Shanghai Gold benchmark price is determined, all valid orders are executed at this price. The operating flow is as follows. And there's a little flow chart you can see showing how they are going to basically execute those orders and how the price will be determined. Moving on, imbalance volume, weight difference between tendered buying volume and tendered selling volume. Shanghai Gold benchmark price is traded on margin. Once the tender is successful, margin will be frozen immediately. Any tendering volume in a particular session shall be valid for that session only. Only the fixing members can participate in the supplementary tendering session. The supplementary session is aiming to improve the trading efficiency in the market and speed up the formation of a balanced price. Meanwhile, it will also reduce the imbalanced volume that allocated to fixing members through supplementary tendering session. This is the privilege for the fixing members, along with their obligation to take the imbalanced volume. More details can be found in the Shanghai Gold benchmark price trading rules of the Shanghai Gold Exchange. We should actually go check that out later on. We'll take a journey over to their website. Again, trading code SHAU, RMB per gram. Trading unit is 1 kilogram bars per lot. Minimum price RMB, 0.01 per gram. Daily price limit, no limit. It's going to be, I'm telling you guys, this is changing gold trade on the planet. It's happening in our lifetime. It's happening right now. It's you could call it history in the making. We're going to go on really quick here because we're going to run out of time. Gold ingots and bars delivered, clearing and delivery. Shanghai Gold Exchange is the new trading product launched by SGE and traded at a fixed time period. SGE acts as the central counterparty for all participants of the trading, conducts centralized clearing and delivery, and collects margins from all trading participants. SGE members and clients shall not worry about counterparties' credit risk, financial risk, or physical risk when participating the Shanghai Gold benchmark price trading. Clearing and delivery time. Net positions on the T+0 are clear on T+2 at settlement price on T+0. Moving on, delivery vault. The delivery vaults for SHAU includes all SGE certified vaults. Quality specifications for deliverable ingots. The physical bullions for delivery of SHAU shall be standard bullions produced by SGE certified gold producers and meet SGE B1-2002 quality standards, or produced by qualified producers certified by the London Bullion Market Association, LBMA. Default and enforcement measures. During the Shanghai Gold benchmark price trading processes, SGE members' risk control department and person in charge must monitor the transactions and conduct an on-site supervision and inspection from time to time. Any violation shall be reported to the SGE in a timely manner. All communications and contracts with the fixing members and the reference price members, including to the exterior, must be recorded during the trading process and to be reserved by a specialized person to be subject to occasional inspections. SGE strictly prohibit any trading behaviors, including price manipulation, matched orders, malicious traded back and forth in the same sessions, individually or jointly disrupt the market, misleading or fraudulent transactions. SGE reserves the right to take actions including oral warning or written warning, notice of criticism, trading permit cancellation, or other punishment measures to the market participants who disturb the market order or are in violation of the relevant provisions of the transaction management according to the relevant rules and regulations of the SGE. The Shanghai Gold Benchmark Price Trading Oversight Committee. The committee is responsible for regular inspections on members and clients' implementation of trading, clearing, and delivery rules, regulatory checks on whether the conflicts of interest exist in the SGE's members and clients' trading behavior. The committee shall study and evaluate the behavior and trend which may not be in accordance with the certain trading rules, report serious violations in a timely manner, and submit proposals to SGE. The committee shall suggest any amendment to the trading rules according to international and domestic laws and regulations. The committee should engage in continuous research on the usage and compliance of the Shanghai Gold Benchmark Price in the domestic and global gold market, and study the benchmark price trading and application of such benchmark prices in exchange-traded market and OTC derivatives trading market. The committee consists of SGE delegates from domestic and foreign financial institutions, professionals from gold industry associations, and so on. They conduct supervision and management of compliance for the Shanghai Gold Benchmark Price trading. The strategic value of the Shanghai Gold Benchmark Price. The dollar-based gold price in today's market is not able to affect the need of price discovery process in different markets. Let's read that part again. The dollar-based gold price in today's market is not able to affect the need of price discovery process in different markets. It has remarkable strategic value for China to introduce its new Renminbi denominated Shanghai Gold Benchmark Price to influence the power of the Renminbi currency in the global gold market. The launch of Shanghai Gold Benchmark Price will provide experience and reference to Renminbi denominated trading of both commodity and financial products. It will further promote the structural change to these two markets. The strategic value of the Shanghai Gold Benchmark Price, including the following aspects. 1. Based on the concept of the Shanghai Gold Benchmark Price, it will help the participants to discover the price advantage of the domestic gold market, enhance the voice power of China in the global gold market for its #1 ranking of the production, consumption, import volume, and refiner process in the world, build the Shanghai Gold Benchmark Price to a major product in the global market, increase the voice power of China in the global price market, and improve the internationalization of the Yuan currency. The Shanghai Gold Benchmark Price will promote the diversification of the gold products, increase its hedge function for the domestic gold enterprises, besides its risk control function. The benchmark price will also create opportunities for Shanghai Gold Exchange and its market participants to develop relevant gold derivative products. Furthermore, it will improve the market function and provide better risk management tools for upstream and downstream enterprises. The Shanghai Gold Benchmark Price will act as a price foundation for domestic gold enterprises in both national and international business. It will provide advantages to domestic gold enterprises from the aspects of raw materials, gold semi-manufactured products, various kind of gold product transactions, the import and export activities, and the negotiation and contract signing of gold investment projects. The Shanghai Gold Benchmark Price will play an important role in prospering and developing the gold investment and transaction in China's gold market. The benchmark price will continuously enrich the development of gold derivative products, attracting more direct and indirect market participants, such as gold companies, commercial banks, institutional and individual investors. The significance of the Shanghai Gold Benchmark Price. With the development of the global gold market, the Shanghai Gold benchmark price introduced by the Shanghai Gold Exchange after the launch of its international board is a sign of the internationalization of China's gold market. The pricing mechanism of Shanghai Gold benchmark price will provide a transparent and tradable RMB-denominated gold benchmark price to market participants, including gold manufacturers, consumers, and financial institutions, to increase the effect of the benchmark price, the trading and delivery activities in the international gold market. Shanghai Gold Exchange is the largest physical gold exchange in the world, with the characteristic of its ample liquidity and diversified physical bullion products stored in its certified vaults in Asia Pacific. It is an important trading platform for investors to participate in the new RMB-denominated gold trading. It is also a significant step in the internationalization of the RMB currency. With the continuous open up of China's gold market, the Asia Pacific is becoming an important area for gold manufacture and consumption in the global gold industry. The domestic gold market has been improving its effect in physical gold trading worldwide, and the demand for gold derivative product and the price risk management based on the Shanghai Gold benchmark price has been increased. After the global financial crisis in 2008, institutional and individual investors are more concerned the function of gold as asset allocation. The launch of Shanghai Gold benchmark price is expected to activate the willingness of investors in gold investment. The commercial banks can take advantage in wide participation, transparent mechanism, and delivery versus payment settlement of Shanghai Gold benchmark price trading, together with the investor demand of trading to develop relevant financial derivative products, gold wealth management, and investment products to provide comprehensive services for participation, transparent mechanism and delivery versus payment settlement of Shanghai Gold benchmark price trading, together with the investor demand of trading to develop relevant financial derivative products, gold wealth management, and investment products to provide comprehensive services for institutional and individual investors. Now let's take a look at the official monetary and financial institutions forums. There's some opinions here regarding the role of the SGE. As you can see, gold, I don't believe anyone can read through this and see this document and see the opinion and the admiration that whole nation states have for gold as an asset, as a wealth preservation vehicle, and not see the value in gold. If you don't see the value in gold, if you're watching this, I doubt anyone has made it this far who's not interested. There's no way someone just sat through 30 minutes of that, and unless they really were a member of this channel. But in case you were, if you don't see the value of gold, and you don't own any gold, and you don't ever plan to, there may come a time in history where you're sitting on the wayside, and the world has passed you by, because gold is money. It is wealth. And I believe the role of gold will from here on out be strengthened and become more and more involved in global trade and the world economy. If not, at some point, return as the main monetary unit of exchange among people. So, regardless of your opinion on gold and its role in the economy, there's a lot of people that are pushing for it to become more than it is today, and I'm glad to see that happening. Let's read along with this now. These are the annexes at the end here. SGE contract and its role in price discovery by David Marsh. The new Renminbi denominated gold benchmark offered by the Shanghai Gold Exchange is a necessary addition to the international gold market and should make the pricing of physical gold more open to the play of market forces. The SGE is the world's largest spot gold exchange, with all trades denominated in renminbi and backed by physical gold held in SGE accounts. However, prices are still derived from dollar-based benchmarks set by trading venues in London, New York, and other locations far from China. The majority of trading on these venues is made up of, quote, paper contracts, in contrast to China, where consumption is comprised mainly of demand for gold bars, coins, jewelry, and manufacturing inputs, as well as central bank purchases. This demand is expected to expand in coming years. boosted by rising average incomes, especially in China's interior provinces and third and fourth tier cities, and the rebalancing of China's economy towards greater private consumption. The relatively small portion of gold holdings in Chinese households, large overall savings, and the uncertain outlook for investments in property or the stock market create opportunities for gold product development, boosting demand for physically backed gold products. Pause. That right there points to an incredible transfer of wealth towards gold and an incredible chance that there will be a bull market very soon, and one that would pass up the Western people like ourselves, our ability to probably purchase gold for the prices that we see today. Chinese banks have increased the range of financial products and services for development, boosting demand for physically backed gold products. Chinese banks have increased the range of financial products and services for their retail and corporate customers. Gold accumulation plans, structured investment products such as Rui gold bars, as well as banks allowing their customers to directly trade gold by providing access to the SGE trading platform, have increased the quantity and variety of gold investment options. Moreover, gold's importance in the overall Chinese financial system has been increased by Chinese banks, gold custody, collateral, and leasing services. Gold exchange traded funds, too, are making headway in China as a portfolio diversification tool, accompanying the growing offering of gold-backed products to bullion-sensitive Chinese investors. There is a strong rationale for an international effort to shift price discovery to China, since this country will be responsible for a large share of future growth in world gold consumption. The market size and growth potential and the expanding range of available gold products will support market liquidity and ensure relative ease in finding ready buyers and sellers, both necessary factors for efficient pricing. Apart from liquidity, efficient price discovery requires low transaction costs. The SGE will provide a central clearing of all bids and offers by its members, with strict rules covering participating members, product quality, and trading conditions. This increases transparency, reduces information and search costs, and helps lower counterparty risk, increasing transaction efficiency. The interaction between Shanghai and London will take time to settle down. One of the factors adding to price volatility would be undue fluctuations in the renminbi dollar exchange rate. If there is further nervousness about the scope of U.S. monetary tightening or about a slowdown in the Chinese economy. By making pricing of physical gold more receptive to the genuine play of market forces, the longer-term effect of the new renminbi benchmark may produce further long-term structural effects that could have an impact in sectors well beyond bullion trading. If the SGE contract proves successful in its early stages of operation, this could open up further possibilities for renminbi pricing of commodities heavily traded and used by China in the Chinese currency as part of the currency's gradual move to full international status. Annex 5, Shanghai Benchmark and the Rise of the Renminbi by Meghna Desai. Shanghai's renminbi-denominated gold benchmark comes at a propitious but also precarious time in the world economy. For the first time in many years, and as a result of varied influences on the international economic and financial system, gold stands prepared to move once more towards the center stage of world money. This transition in gold's role is accompanied and has been influenced by a significant increase in the international use of the renminbi as the Chinese currency moves towards full status, both as a reserve asset and as a unit widely used in international financial transactions. A landmark move is the inclusion of the renminbi in the International Monetary Fund's special drawing right, giving it reserve currency status alongside the dollar, euro, yen, and sterling, decided last November and due to take effect in October 2016. So pay attention to 2016, October coming up, ladies and gentlemen. Gold's official position in the global financial system disappeared after the collapse of the gold exchange standard and the Bretton Woods system in 1971 to 1973. But now, change seems to be underway, and the epicenter of this activity is in Asia. A renminbi-denominated physical gold-based trading standard seems ideally placed to assist a growing number of Asian central banks keen to diversify away from U.S. and European assets in their foreign exchange reserves, a factor that has helped put a floor under the gold price during the downturn of the past few years and has contributed to a sharp recovery in 2016. I truly hope most of the members of my channel are still watching this video and hearing this part especially. This is the most important information to hit the gold market, most likely in our lifetime. This video right here, this article, some of the most important information regarding gold in our lifetimes. All these issues are linked. The lesson of history is that at a time of flux in the world monetary system, as seen, for example, in the 1960s, gold goes through a resurgence. As a result of oil price fluctuations and uncertainty over U.S., European, and Japanese monetary policies, financial markets have witnessed great febrility since the start of 2016. The global economy is likely to see further volatility as it transitions towards a multi-currency reserve system. The world is witnessing a pervasive growth pessimism. The new normal is low growth rate of GDP in real terms, lower than in the era of the Great Stability, 1990 to 2007. Productivity growth, which is at the heart of real income growth, has collapsed when compared to the longer run trend of the post-war years, 1945 to 2005. After 75 years, since 1939, of positive and sometimes dangerously high inflation, the rate of price increases has fallen to levels not seen since the Great Depression of 1873 to 96. Europe and Japan have moved to negative interest rates, even though there is no certainty that the policy will produce the desired rise in inflation, and every chance that it will be counterproductive by dampening bank profitability. There is no general governmental willingness to take advantage of the low rates for financing infrastructure investment badly needed in G7 economies. Although the IMF has been warning about the poor world economic prospects, the fund and leading G7 countries have not changed their negative attitude on using fiscal policy to revive growth. Directly linked to worries about the world economy, doubts about the dollar, and negative returns on other major reserve currencies, central banks have been progressively larger net buyers of gold since 2010, with the main activity centered on the emerging market economies. Central banks from the developed world, which unloaded large portions of their gold stocks in the last 1990s and early 2000s, have stopped selling. The result is that annual reported net central bank gold purchases are now around the highest for 50 years. While total currency reserves fell in the final quarter of 2015, central banks made net purchases of 167 tons of gold in that period, a 25% increase on the year before. Amid a fall in Chinese foreign exchange reserves, partly because Chinese companies are using the People's Bank's dollars to repay foreign debt, China is investing more of its trade surplus into gold rather than dollars. The activities follow a certain pattern. In a report on gold, the renminbi and the multi-currency reserve system published in January 2013 and updated in April of 2014, OMFIF drew attention to the probable increase in gold's role. The role of gold in the international monetary system will be further enhanced in the coming 10 years as a result of basic uncertainties over the dollar and the euro, and over whether the renminbi can emerge as a robust international currency without encountering fundamental setbacks. After the price recovery, the crucial test for gold is whether it can be as good a hedge against disinflation as it was believed to be against inflation. In a world of negative or very low rates of inflation, gold can be seen as a safe bet with a positive rate of return. The fear of another financial crisis has not gone away. The failure of recovery to take hold, despite persistent heavy money creation, has added to the fears of a crisis coming sooner rather than later. Foreign banks will need to participate in the SGE in order for it to become a truly global benchmark. Simultaneously, China is recalibrating its growth strategy away from exports and infrastructure to one based on domestic demand. The strategy that succeeded for 2 decades in taking China to its second place in the global economy was capital intensive and has led to excess output. China has to redistribute income away from public as well as private corporate profits towards wages and salaries. It has to reduce its very high rate of savings and allow households to consume more. Thus, the renminbi's success will depend on the smooth completion of multiple Chinese economic policy transitions. In my foreword for the January 2013 LMFIF report, I wrote, if the specter of collapse continues to haunt the main reserve assets and on the expectation that the renminbi will take time to get into its stride, the world will rush to safe havens. Gold may be the only one with the requisite size, clout, and dare I say it, history to help ward off the strains that will beset the world monetary system. These remarks hold true today and provide an adequate backdrop for the launch of the Shanghai Gold Renminbi benchmark. Ladies and gentlemen, viewers of the Junius Maltby channel, it's very fitting that this has most likely become the longest video ever recorded for what is known as the most boring channel on YouTube. But it's very fitting because this information, these stories, these opinions from the Official Monetary and Financial Institutions Forum, this news release, this paper about the SGE are pivotal. I mean, this is a watershed moment in history for those of you who own gold or plan to purchase gold further. For those of you who are saving for retirement, for those of you planning a future, for those of you trying to pass on wealth to posterity, to your heirs, what we are seeing is gold returning to the stage. You see, it doesn't matter what your Uncle Al at Thanksgiving dinner thinks about gold. It doesn't matter what your smart little millennial nephew, who is highly educated now because he's gone to college for a couple semesters and met some little beatnik friends and discussing philosophy over his latte with his little tweed vest and his skinny jeans. It doesn't matter what his opinion is of gold. It doesn't matter if he understands it, if he doesn't like it, if he doesn't want it. What matters is what is. And gold is money. It is being cemented as money. It will continue to be money for millenniums from this point forward. And I truly believe now, after this information and this week, not that I was a skeptical, there's no way that I could, run this channel as a skeptic of gold. But I truly believe after this information that has broke this week and the articles that are coming out and the information that's flowing freely, that gold, we have not only seen the lows in gold in our lifetimes, but we are sitting at a point that is possibly the best buying opportunity for gold in a long time. Well, the best time would have been obviously in 1999, but from this point forward, I think we're going to see a lot higher prices. I'm not saying there's not going to be dips between now and then and some volatility at times, but I think we are going to see at one point, at some day in the future, we will look back at $1,200 gold like we today sit here and look back at $256 gold back in 1999. So just reflect upon that for a moment. Look back in time, close your eyes, look back at 1999 if you were alive then, at gold that was $256, $260, $300 an ounce. And imagine those prices today, how unrealistic that is. Now imagine in the future looking back at $1,200 an ounce the same way. Imagine sitting on $5,000, $6,000, $7,000 an ounce gold and looking back at gold today at $1,200 and realizing you didn't buy any. Thanks for joining us again for the Junius Maltby channel, the lengthiest video yet, and I hope you sat through it. If you did, leave a comment that you did. Hopefully you were able to glean some things from this article. I hope you guys took it all in. I hope you can go and read it yourself, and I hope you can share it. Please share it. Spread the word. Get your community, get more people around you, more family that you know, to buy gold. It's time to do it. It's time to sit on gold. It's time to reject paper. It always has been, but now more than ever. Thanks for being here. Thanks for participating. I hope you guys enjoyed this edition.